So the hedge fund kind of rushing into gold after the week that was very traumatic last week. Is this like a real thing, like a real shift into a different asset? Sonali, how do you understand this? We talk to your sources.
Well, it's the biggest push in 12 years. To me, I love that because that means it's the biggest push since 2007. And we all know what happened after that. Gold is a safe haven, right? And so what does it mean? Is this a short-term play, or is this something that they're seeing that's a little bit bigger? You know, a lot of these big hedge fund managers, David Einhorn in particular, in the last 5 to 10 years, they've seen some real down markets in gold and suffered serious losses, had big parts of their portfolio dedicated to gold, and now it's a time where they can say their big macro bet is paying off. Of course, they can thank the Fed a bit for this, as interest rate expectations lower.
So, Mark, connect up the dots if they connect here. On the one hand, the value, the price of gold on the one hand, and foreign exchange and the value of the dollar on the other.
Sure. So I think that I don't think there's a great relationship, but I think oftentimes what we find, I think, is that we've seen the dollar back off in the last week or so, and we have seen gold move higher. I think people see those two things. But I think the gold market is so much smaller. You know, one of the things I really like about foreign exchange is the biggest market. More than $5 trillion a day turnover. That's average daily turnover. Off the top of my head, I can't tell you how many years of supply of gold that could buy. And so what fascinates me is not just the hedge funds buying gold, but right now
12 or 9 Olympic-sized swimming pools.
Quite a bit, huh?
Something along those lines. But go ahead. Sorry.
Yeah, but just that it's not just the hedge funds buying gold right now, but the central banks are buying gold. We saw that in some other central bank reserve data, including this morning China. I think it's buying gold for the 5th or 6th month in a row.
But part of that's going to be just normal reserve rebalancing. But I was struck by what Sonali said about 2007, because I was covering gold in 2007, and that was like, you know, then you're talking about 2000. That was the conversation. A totally different environment than like 1325. It's you can't compare the two.
Yes, gold has been fairly tame, but I mean, interest rates have been low, and stock market's been going up. There's been, I want to say, alternative investments that gave a better return.
Yeah, true.
But now people are thinking maybe if the stock market looked heavy last week or last couple of weeks, maybe gold is a place as a safety place.
Something interesting to me, too, it's not even just the hedge funds, like you were saying. If you look at GLD, the gold ETF, Morgan Stanley is the biggest holder right now. And so you have kind of everyone across the board that's betting on gold, but whether it's for the short term or the long term is unclear to me.